Hey, how's it going, guys? Chris here. Today we're going to be looking at Commonwealth Bank is the most expensive bank in the world. And I think in general, Australia has the most expensive banks in the world. And why is that? Because we have the biggest mortgages, and mortgages are the easiest way for banks to make money. So, yeah, as long as the housing market keeps going up, the banks are going to be rich as hell. So, if you guys have watched a couple videos before, make sure to subscribe. We just hit 1,000 subs, so thanks for that. We hit it before the end of June, which was the goal. So I don't know what the next goal is. I guess 2,000. Let's try and get it before the end of July. And yeah, make sure to subscribe if you want to keep in the know about what's going on in Australia. Other than what you already know, which is it's falling apart. Just a bit more about why it's falling apart. That's pretty much what I cover here. Let's get into it.
If you're asking me what is CBA's share price worth, the answer is a clear no. But share prices can express many things apart from how you value something. And really what it reflects, I think, is, and it's an old adage that you often hear, but there are more buyers than sellers. And so what I'd like to do is perhaps to give you a little bit of a long, rambly explanation of why I think the CBA share price is where it is. So in Australia, Commonwealth Bank is now about 12% of the ASX 200. Perhaps more importantly, it's about 2.
That's pretty crazy. Like, out of the top 200 companies, Commonwealth Bank is worth, over 10% of that. 1/10. That's crazy to think about. And I think it's even crazy when you compare that to other countries where banks are nowhere near as profitable as they are here. And obviously that comes down to probably good dividends. One for shareholders, they want to keep buying, and they keep just making shit tons of money, right? And it's insane. Like, the banks, they advertise like they're here to help, and they'll help you and they'll get you home loans, get you into your house. But at the end of the day, they're profiting heaps off it. So off a 30-year loan, you're paying the price of the house plus the price of the house in interest. It's insane.
0.2% of the Asia Pacific ex-Japan MSCI index, the big global index. When we have a look at it at the moment, you've also got money flowing into the equity market as much as anything because of compulsory superannuation in Australia. But the significant thing there is from 1 July, superannuation increases from 11.5% to 12%. So that means more money will flow into the equity market. But we've also got the situation where CommBank's share register is skewed towards domestic retail shareholders to the point that institutions are underweight. So what that means is when you bring the Know Your Super rule in, which penalises funds that underperform the market, so they basically have to track closer to the index, they become net buyers of the stock. So the more it goes up, if you're underweight, the more you've got to buy, which means the more it goes up, which means the more you've got to buy. Now, there are things that can break that down, but that is what is driving CommBank. So going back right to the very beginning, what's it worth? Probably $80, $100 a share. But that's not what is being expressed in the share price at the moment. There are a number of things that can make it break, but value is not what is driving.
Wow. So I just had a quick look. The CommBank share price is $184. This guy reckons it should be half of that, almost. It should be $80 to $100. That's crazy to think about. But that whole theory of that the superannuation funds have to keep, track of the index, and because CommBank keeps going up because retail buyers, me and you, keep buying it, as well as ETFs keep buying it because it's weighted, 12%. So then super funds have to buy it. That's a crazy way to think about it. I don't know. It's I think there's a lot to do with just in general Australian banks just are overvalued.
The CBA share price at the moment.
The bulk of analysts have either a sell call, an underweight call, or a negative rating on the stock. The fund managers, though, who followed that advice haven't done nearly as well as the fund managers who didn't.
Correct. If we just have a look at the 6 months to date, the calendar year to date, CommBank is up 26%, the market's up about 6.5%. If we go back and have a look over the last decade, me ringing up a fund manager to tell them to sell Commonwealth Bank because it's expensive has not been a particularly good strategy. So if we have a look at even over a 10-year horizon, the ASX 200 has done, I think, about 120%. You've had ANZ NAB. ANZ's done about 50%. Westpac has probably done around 60%. NAB's done 80%. So all the ANZ, NAB and Westpac have all underperformed. But CommBank's done about 190%. Bank of Queensland has delivered -7%. So CommBank, it's just comprehensively outperformed the other banks over short time frames, over long time frames. A bit of it is this incremental scrip demand, but the other thing is it's managed better than the other banks. It out-earns the other banks. It's just a better bank. But that doesn't...
Yeah, it's the biggest bank in Australia, right? So, but for it to outperform all the other banks that much, that's saying something, right? Like, is it, 100% growth rate better than Westpac, ANZ, NAB? I don't know. I'd love to hear what you guys think below. Do you think CommBank's overvalued? And just in general, like, I honestly think the whole banking sector in Australia is overweight. Like, that's where I think the ASX 200 is like made up of, like, a good chunk of it's made out of finance. And not just, that and resources. So like your BHP and whatever, they're like most of your fucking ASX right there. So obviously there's a high dependence on these sectors that don't really produce much. Like, obviously mining does produce a lot, but it's all exports. It's not much for actually Australia.
I can justify the share price to you. I can't.
What's your official rating on CBA?
Well, I thought I was very smart recently because I downgraded from a hold to an underweight recommendation when it was about $180 a share. And I thought, so that was like about 3 or 4 weeks ago, and I felt really good about that. And I look today and I see it $191 a share. It's clearly just comprehensively, it just keeps on smacking anyone who comes out and has a negative view on it. Commonwealth Bank, from a fund manager's perspective, is a great share to own. It's a shocking share to trade. So I just think it's a very dangerous stock for international investors and also domestic institutional investors to actually underweight. And that's what's basically driving its share price.
One prominent fund manager has reportedly said that CBA is the biggest stock bubble they've seen in 30 years. Would you agree?
No, I think I actually thought the Afterpay bubble was even bigger. So if we have a look at it, I mean, all the stock market is expressing is the difference between the veracity of which people have got to buy the stock versus the sell. But I've seen bigger bubbles than this one, but it is pretty extraordinary. But what is different is that, I could come up with various scenarios that would make the Commonwealth Bank share price fall. But the really big one is you need to have the equity market fall for that to happen. But no, I think...
I mean, if you watched any of my previous videos, like you know that, well, you won't know, but you'll see that there's a lot of doom and gloom at the moment, and the potential of a recession, especially with the housing market bubble, is pretty high. However, at the same time, you got to wonder, like, will it ever pop? Because you look at the housing prices, they're not going down; they're still going up. And like here in Queensland, there's the government starting to share equity of like 30% on new builds. So they're just propping up the housing market. And as long as the housing market stays up and continues to go up, the likelihood of a full crash in Australia will be low. However, it will be interesting to see, like, if the equity market the stock market like falls quite drastically, will that affect housing market? Normally they are pretty correlated, so it'll be interesting to see.
I've actually seen bigger bubbles than basically this one.
There's a lot of passive money in the market chasing the index at the moment. In this environment, do fundamentals matter anymore?
No, I don't think they actually do. But I would flag to you, Alicia, and it's quite...
See, I think that's scary, right? Like, if fundamentals don't matter and it's just all index-based investing, what happens when the market does crash? I feel like it would be even bigger of a crash. I think I've seen videos on that where it's just like, once this like there's only a small door, right? And if everyone's trying to rush out the door with ETS, like shit's just gonna hit the fan really hard and just blow up. I'd love to hear what you guys think below about what would happen, what you think's going to happen in terms of recession. Do you think it's going to be a real crazy one, or do you think, nah, it's no chance of a recession coming?
Significant.
Like, obviously, we're in a per capita recession, and that basically just means immigrations is holding up the country, even though it's breaking our systems that we have in place. It's, on paper making us not in a recession. However, the signs are sort of there already.
The Know Your Super rule in Australia, which means that if you underperform for 2 consecutive years, you can't take money on board. It actually means not only is passive money going into CommBank, but the active fund managers capitulate and they have to head more towards benchmark as well. So it's not just passive money, this is active money that is rotating into it as well. And unfortunately, we've now also got a trade out there at the moment, which is a lot of people speculating the end of what's called US exceptionalism, which means they look around the world to take money out of the US. Australia stacks up pretty well, but in Australia, would you put money, for example, into the resources sector or CSL or Woolworths? Commonwealth Bank ends up getting a disproportionate source of those flows as well.
You mentioned the stock market falling. What else could turn the tide for CBA?
I've got 13 catalysts for you, neither of which I'm particularly confident about, and I apologise, I'm going to look down as I actually read some of these. First one is stock markets go down globally. Stock markets go down globally, CommBank probably falls more. You get negative index reversion. The second one, the A dollar falls, or more importantly, the prospect is that the A dollar is going to fall. If that happens, the international fund managers would be thinking that the share price is going to go down in US dollar terms. They sell in advance of that. The third one, which is that the alternatives suddenly look better. So that's BHP, CSL, Rio, Santos, Woodside and Woolworths. It's not yet apparent that that is actually the case. Those stocks are still underperforming the ASX 200 year to date. The next one, which is likely, tax-driven realisations as we head towards this change in the way superannuation funds are taxed. That is likely. The next one is that ANZ, Westpac and NAB suddenly improve their operational performance. Now, that will happen at some point, but we've got new CEOs coming on board. That probably takes a little bit of time to come through. The next one is that we have the government levy the banks specifically for the deposit insurance that they get. I think that's unlikely now with the election having passed. The next one is you have a genuine asset quality crisis in Australia, but that requires house prices to fall. That's unlikely because demand overwhelms supply, but in any case, CommBank have got stronger provisioning than the other banks, so that's an unlikely one. The next one, irrational competition. Banks start competing aggressively on basically mortgage lending. Now, as pleasant as that sounds, you can actually see the opposite has been happening in recent weeks where banks are not passing through all of the rate cut. The next one is that we get CBA management change. Now, I also think that is unlikely, and that's been one of the big drivers of CommBank, is this exceptional team of individuals they've got. Not just the CEO, Matt Comyn, but all of the executive committee there are truly impressive, world-class in everything they do. The next one, a dilutive offshore acquisition. I don't think they will actually...
I'm going to cut the video here, but honestly, all those situations, obviously, any of them could happen. And wouldn't surprise me, like the amount of greed in this country is insane. So, yeah, like if banks decide to start being greedy against each other and, cut each other's legs out from underneath each other and, lower their prices and be a bit more competitive, could be an option. But, as he said, banks are greedy as hell and they're not doing that at the moment, and they're not passing on rate cuts to, the people that need them. Like during a cost of living crisis, it's insane. But yeah, I'd love to hear what you guys think below. If you enjoyed this video, make sure to like, and I'll catch you in the next one.